Joining us now, Andy Serwer with Jes Staley.
All right, Jes, great to see you. Welcome to the Yahoo Finance All Market Summit.
It's great to be here, Andy.
So, an American banker in the UK, that's Jes Staley, and running one of the largest financial institutions on the planet. And that's probably a story in itself, being an American there. But I think I'd like to start off, Jes, by asking you to explain to us, Americans and international audience, what the heck is going on in the UK with Brexit? Just what is your, I mean, it's so vexing to us, and yet, in a way, familiar. So what's the state of affairs?
You know, it's interesting that it's happening with the political environment in parallel in the U.S. In the U.S., to a certain extent today, you have a constitutional crisis. In the UK, in a way, you've got a crisis because there's no constitution. The political architecture in the UK is really one that's evolved over centuries, and there is no rule book. And so the actual role of the Prime Minister and Parliament and the Queen has just been developed over time. And you've got a situation now where, one, the government under the Prime Minister Cameron called for a referendum to leave or stay in the European Union. And it's and because there is no real rule of governance law, is that referendum applicable? You know, does it have staying power? Is it, do you have to really follow the fact that the majority of the population voted to leave? That's an open question. And then what you have is, Parliament has sort of broken down where you've got a whole bunch of different camps, and no one can pull together a majority. So you have this massive stalemate where basically nothing can get done. What the current Prime Minister wants to do is he wants to force an election, because he thinks that by being strongly in favor of leaving, even without a deal with the European Union, that he will win handily. And the Labour Party, which is the far left in the UK, I think, believes he may have a shot at doing that, so they're not letting him call an election. And so we're sort of stuck right now. The key issue really is Ireland, and I've been saying this since the referendum vote, is to keep an eye on Ireland, because if you live in the UK, let alone if you live in Ireland, the civil war between Northern Ireland and Ireland that went on for centuries was incredibly violent and hurtful across the UK and Ireland. There was a Good Friday peace deal done by a senator that you and I know well. Mm-hmm. And what that deal did is it basically convinced the Irish that Northern Ireland was still part of Ireland. And you can drive from Dublin to Belfast back and forth all day long. But then he also convinced the people in Northern Ireland and the people in Great Britain that Northern Ireland is part of the UK. There's no border between the UK and Northern Ireland. But that lack of border between Ireland and Northern Ireland is really what keeps that whole Irish island together and out of conflict. If you pull the UK out of the European Union, technically you need a hard border between Northern Ireland and Ireland. And that is something that is just antithetical to everyone in Ireland, most everybody in Northern Ireland, and poses a real risk. And it shouldn't go unnoticed that there already have been some bombs that have gone off, the new IRA, as they've called it. So this Irish issue is really critical, and the deal will ultimately happen if they get some resolution to the Northern Ireland issue. But it's very complicated.
Wow, I didn't realize that I knew that Ireland was an issue in this whole process, but I didn't understand that context. That's fascinating. A lot of people in the United States sort of think that they should have another referendum and that Brexit would be easily defeated. Could there be another referendum, and would it be defeated?
There could be another referendum, and a lot of people, like the ex-Prime Minister Tony Blair, is working hard to try to have a second referendum. I think it's 50-50 how it would come out. As you've seen, even again in many locations, whether it's France, whether it's the United States, a lot of people don't necessarily vote for what's economically in their best interest. There are a lot of motivations pushing voters around this day, and immigration is an issue in the UK, and so I think it's very undetermined. But the real problem with the second referendum is, what's the referendum about? To have another one that says stay or leave, that would be disastrous, because the real issue is stay or leave, but how you're going to leave. And so you need to put an exit strategy on the referendum that the European Union would accept, and try drafting that. So I think a second referendum, again, because there's no rules, it's not binding, and ultimately, it's sort of Parliament that will decide. And what Boris is saying now is Parliament is ignoring a legitimate referendum by the British population to leave. So what does a second referendum really give you if you can just turn it down again?
Wow, it just adds to the complexity. I'm just shaking my head. So, all right, so how do you think this is going to play out then? I mean, where are we going here?
Well, I think the UK is feeling the burden of it. Obviously, sterling, the exchange rate between the dollar and sterling is off a lot. The economy clearly is growing at a slower pace than it otherwise would. Investment is not being made in the UK that would otherwise be made. And you take Barclays as an example. When the referendum vote happened, the one thing we said to ourselves is, because this is such a politically, dangerous issue, it will not be solved until the very, very end. In fact, we were wrong. It's not. It wasn't resolved at the end. They moved the end out, but we basically restructured the bank to deal with whatever happens in Brexit. So what we've done is we've taken a third of our British bank, and we are now the largest bank in Ireland. And all of our branches, from Frankfurt to Milan to Madrid, are now branches not of a bank in London, but of a bank in Ireland. And the capital necessary to support that bank in Ireland has moved to Ireland. So that, on one level, is, I think, a loss. Manageable, and London's going to stay the financial capital of Europe, in my view. But there's been a price to be paid for it. Now, over the long term, over 20, 30, 40 years, will it have been a good thing or a bad thing economically to have independence away from Brussels? That's a fair question to ask.
That's fascinating. I mean, so overall, it's a negative for the bank, is it? Or could you turn this into a positive, even?
It's not the risk for the bank is what happens to the UK economy, obviously. So if there's a recession or whatnot, that impacts Barclays. But to a certain extent, part of the response to the financial crisis has been a balkanization of finance. 45% of our business is in the United States today. To do that, we had to create a bank subsidiary in the United States with a whole new regulatory construct, its own board of directors, its own CEO, and so we created that in 2016. Now, then in the UK, they required us for our consumer retail bank to set up a ring-fenced bank. It's got its own general ledger, it's got its own board of directors, it's got its own data centers. It's totally protected from the rest of the bank. It's got its own regulatory framework. And now, to operate in Europe, we have a bank subsidiary in Ireland, which is part of the European Union. It's got its own board of directors. It's regulated by the European Central Bank. So we have basically three separate banks to deal with the regulatory framework that has come out of the financial crisis. But we can do today for our customers and clients around the world what we could do before all this happened.
I was just about to ask you, Jes, Barclays stock has been under pressure over the past several years, and I think maybe you just answered why to an extent, because if I'm an investor, that level of complexity, even if you go from A to B to C, fine, you get there. It just sounds like, as an investor, that's a tough thing to have to explain to someone. Is that part of the reason why the stock has been under pressure?
So it is obviously deeply frustrating. In the first 6 months of the year, we had the most profitable statutory first 6 months that this bank has had since the financial crisis. We've tripled the dividend in the last 2 years. We have the highest dividend rate since we had since the financial crisis, and the stock's under pressure. There are three reasons. One, there is the uncertainty of Brexit. If you're an investor, why buy a UK stock today?
Right.
You wait until the uncertainty of Brexit is over. The second issue is interest rates. Interest rates in Europe are extremely low. You have 17 trillion euros worth of negative interest rate sovereign debt. In the UK, the 10-year gilt is now below 50 basis points. If you're a bank and interest rates are basically hitting zero or negative, it puts pressure on you. And that's why virtually every European bank is trading below its book value. And the third one, which is sort of a little bit self-inflicted, and I think the regulators are coming to grips with this, the U.S. Regulatory response was to basically hit the banks all at once. And the recapitalization and recalibration of risk for the U.S. banks was basically done by 2010. And everyone believes now that the Federal Reserve and the U.S. Treasury is done recapitalizing and recalibration risk for the banks. They don't have that conviction about the European regulators nor the Bank of England. The European regulators felt that they would bleed over time the new recalibration of risk called IFRS 9 and the recapitalization over a period of time, even going out to 2022. It doesn't work that way. If an investor sees that something may happen in 2022, they discount what it means today with uncertainty. And so it's basically Brexit, it's interest rates, and we've got to stop the re-regulation of the banking system to let the banks recover in terms of the value in Europe, including Barclays.
Well, I mean, that is a lot to chew on. And I think, as you're suggesting, the uncertainty just makes that a tough sell. I mean, if you're talking to an institutional investor, you're like, okay, bear with us. We got this, we got this, we got this. But we're really profitable, doing really well. But we do have this, this, and this. And
then, the added problem Barclays faced, and to a certain extent more than many others, we had, when we arrived at Barclays 4 years ago, we were being sued by governments around the world for LIBOR, for foreign exchange, for commodities trading. The bank had done a capital raise in the Middle East, which we were being criminally prosecuted by the British government up until last year. And then we had this thing in the UK called PPI, which is an insurance program sold to consumers by all the UK banks in the early 2000s, 2002, 3, 4, and 5. And it was deemed by the regulators and by the courts as to be bad sales practices. The British banks in the last 5 years have paid claims out to UK citizens on a interest rate basis of 8% per annum for like 15 years, 50 billion pounds. That's the book value equity of the British banking system. That's how much capital has gone to and the banks did things wrong, and we have to repent for what we did and whatnot. But we got to get all the bad conduct and litigation issues behind us, and we finally have that done now.
I got to ask you, why the heck did you take this job? I mean, right? You must have been crazy, right, to get yourself into this thing.
Well, one director who I have enormous respect for when we were talking about doing this said that. He said, you're undercapitalized, you've got all these litigation conduct issues, you've got the re-regulation going on, they may not let you make this work. But the bank is in a great place now. As I said, best earnings in over a decade. We're in a good place, and we'll be fine.
I mean, it sounds like you're making the argument not overtly that the stock is undervalued. I mean, you might not be in a position to say that as a chief executive officer, but...
Oh, it's undervalued. I mean, I'm happy to say that.
Okay, you said it. You heard it here. I want to drill down on one facet, one of your problems, one of your issues, which is not any of your doing, but which scares the heck out of me. And tell me if I'm wrong, which is negative interest rates. I mean, I don't understand why you can give someone $100 and then 5 years later they give you back $98. I just think it's weird, and I don't know how it's going to end, but how is it going to end?
So I'll give you sort of what I think might be an odd response. As I have tried to anticipate what was going to happen in the global economy, and particularly UK and Europe, to a certain extent the US, the last 4 years, I've been wrong every year. And what's difficult for me is if you and I were sitting on this stage 10 years ago, and we said, okay, we're going to have a 10-year economic recovery in Europe and the US. We're going to have the lowest unemployment rate almost ever in the US, lowest unemployment rate ever in the UK. Where would the 10-year Treasury be?
15%.
It would be at least a four handle or five handle,
Yeah.
not one and change going south. where would the gilt be? The 10-year gilt would be 4 or 5%, not 50 basis points. So there's something going on where low unemployment, 10-year economic growth is not transmitting into inflation, is not transmitting into wage pressure, and therefore the market believes that there is no inflation right now, and therefore we can keep interest rates extremely low. And the central banks are being very accommodative. I think the challenge for Europe and the UK, and to a certain extent, the US administration has the one that perhaps has done the right thing. The United States has the highest fiscal deficit as a percentage of GDP in a growing economy ever. In the UK right now, the fiscal deficit as a percentage of GDP is 1%. If someone is if your economy is growing at like 1.5% and you can borrow at 50 basis points for 10 years, why do you have a deficit of only 1% of GDP? You should be borrowing the bejesus at it, building roads and hospitals and airplanes and everything else. And then you look at Germany. The German government can borrow 10 years and get paid 70 basis points a year to borrow your money. And they run a fiscal surplus. Yeah. So it's almost like, I'm going to give you free money, but you don't think there's anything that you can invest in to make a return to justify getting the money for free. And so I think what's happening is monetary policy is running its course in terms of what it can do to stimulate economic growth. It has to now be matched by more fiscal stimulus, infrastructure investment, et cetera,
so
or tax cuts.
We have that deficit, but we're not spending on infrastructure.
What you did, which probably has the fastest transmission effect in terms of getting the economy going, is you cut taxes.
Right, exactly. And
but your deficit is a little north of 4% now. But you cut taxes, and that got the economy going.
And China's doing infrastructure, but that's a whole other conversation. So I want to ask you one last question. We've talked about this before, and neither one of us could answer, so I'm going to ask you again. Okay, globalism was this inexorable force coming from World War II. Brexit, Donald Trump, Erdogan, Xi Jinping, Bolsonaro, all these people, there's this rise of nationalism. And remember, we had this conversation. I said, Jess, you think this is a question of our time. Is it a blip? Is it the end of globalism? Which one is it? Is it temporary or is it a permanent end? Have you thought about it?
Yeah, I don't, yes. We do a lot, in part, and I'll tell you why in a second. I don't think it's the end of globalism, but do I think that globalism will be structurally challenged for years? Yes. Treaties have been broken. You can't, there's a national self-interest that's dominating politics. But as you and I have talked before, so Barclays today arguably is the only remaining bulge bracket investment bank.
I have to interrupt you just because we got to go because the stock exchange is closing right now. So we have to go for the closing bell. So sorry to interrupt you. And I really want to hear the answer. Maybe we can get after backstage and we can broadcast it out. Anyway, please join me in thanking Jes Staley, CEO of Barclays. Sorry about that.